Everybody, happy Monday. Welcome back. It is Monday. It's Labor Day. It's 9 o'clock. Markets are quiet today. Futures markets open. I believe some brokers have limited hours until 1 p.m. Eastern time today. U.S. equities will be open today. It's just going to take a look at everything, get caught up, take a look at the news, a little market outlook. What do we have rolling in this week? We do have some U.S. news to unpack. Let's go high impact right here once we kick off officially Tuesday. CPI report out of Switzerland, PMI numbers out of the US, GDP for Australia, Bank of Canada rate decision expected to cut rates by 25 basis points. That would be Wednesday at 9:45. We have US JOLTS jobs openings, unemployment claims on Thursday, ADP non-farm, another PMI number for services, so manufacturing is on Tuesday, services on Thursday, and then Friday, double whammy with employment, CAD news, and U.S. news. I think we talked about this one last week, looking at the forecast. Average earnings 0.3, non-farm 164. U.S. numbers would be fairly sensitive to the employment data, which is coming out all week. I mean, PMI numbers, manufacturing PMI forecasted 47.5. Services PMI forecasted just above that 50 handle. Let's have a look at the chart here. So the last print we had beat on PMI, and back in July it was a miss. If we go into non-farm, 164 expected, 4.2. Sure, the market's going to be eager to see on Friday for non-farm payroll that the unemployment rate is still coming in 4.2 or lower. 4.3 was what triggered the SOM rule, and everyone got all worried. That would have been August 2nd. That led into that kind of crazy 3-day move that we saw August 1st, 2nd, and 5th, which we've all but recovered. So speaking of that, here we are at the near the all-time highs in the S&P. Last week, I think we had 11 of 11 sectors advancing. Let me go to FinViz really quickly and take a look. So this was Friday's close. Everything pretty much in green. Here's the heat map. So broadly in green, Tesla up, Amazon up, just looking at the bright greens here. Mag 7 doing its thing. Financials up. Semiconductors up. Nvidia down to 119 from the recent highs at 130 and change. Energy down slightly. Let's have a look at our indexes. So here's the S&P with your SPX. I'm looking to fade. If we hit all-time highs, I'm looking to likely take a couple of stabs at it. So, if we hit non-farm and we kind of poke the highs, I'm looking to short for the kind of the month of September. Going to take a chance, probably some option trades, bear call spreads, maybe a couple of bear put spreads. But I guess the easy trade would be if we just break the lows, versus trying to short the highs because there might be some more momentum there, and then all of a sudden we have a nasty turn. I don't want to get in necessarily too early in case this has room to run, but I could certainly see this floor, this recent floor. We had about 9 days of indecision. We came right back up to the same highs again. So if we break the floor, let's check that price. Around 55, we'll say 55.60. So if we break that level at 55.60, right in here, then I'm looking at some bearish trades, to what levels? Filling the gap around 5,500, filling the gap around 54.60, possibly eating into this structure right around 5,400. So that would be if the bulls are going to hang in there. We could see a healthy correction where this ends up being a larger head and shoulders pattern, and we end up going to all-time highs, but it might be pullback is coming in order to set up that kind of building phase and accumulation by the bulls. So I think anything between 5,500 and 5,400 is kind of a safe zone to be looking to buy. As opposed to if it breaks below that, we break below 5,400. If we break below and we don't come immediately back above here, I'd be concerned that we end up heading, come back to retest the lows, which may or may not happen, but there's enough news to see where the market's going to take price and follow along. So, David, good morning. Keith, good morning. Gary, what's happening? Chris, good morning. Nice to see everybody. And happy Labor Day. Happy Monday. All right. So, S&P, SPY, pretty big candle on the day on Friday. We had a low around 557 and a late day rally. From the low to the high, we were up over almost 1.2% on the day. It shows that it closed 0.95. Let me see here. Let's see, 0.95 on the S&P on Friday. Qs were up 1.19. Dow was up 0.56. IWM up 0.58. 11 of 11 sectors closed green on Friday. We had advanced decline, about 65% of stocks advancing. We're sitting around 70% of stocks above their 50 EMA and about 67, almost 68% of stocks above the 200 EMA. So, data has not been disappointing. It's been good enough, and the markets are loving it. So, thankfully a recovery since August 5th. Are we at all-time highs? Not quite. I could see the markets tapping these highs first, but fading. So what I'll be watching for is if we get to these highs and we start to show bearishness, I'm probably going to take a couple of bear call spreads through the month of September and be a little bit bearish for the next, let's say, 30 to 40 days. And we'll see if the market's going to be saved by a typical like election cycle / seasonality. Let's go into the Nasdaq. Okay, same type of thing here. We had a pretty decent push to the upside on Friday. This is the candle that I think the bears at least showed some sign of control. And let's see if the bulls, even if they were to run it up here, do they pull back? So I'm looking at a bit of a range right now in the Nasdaq. To the downside, this could just get faded. Fade this again. We have more corrections. We come back and find this gap. We come back and find this gap. We pull back into the structure area. Same thing that I'd be looking at on the S&P, just more of a pullback. If we make a fake to the highs, does this fade back down? That's kind of where I'm watching is this area. If I have resistance right now, it's going to be right in here. Resistance in here. And support, I would say support goes all the way down to this level. So we have some wiggle room, price up, price down, but we have some wiggle room on some type of volatility. Not necessarily like big direction, percentage-wise, maybe a couple percent here and there. Let me see. So current price, maybe 2.5% to the upside, 2.5 to 3% to the downside. And Nasdaq is typically more volatile than the other indexes, so keep an eye on that one. Let's go to the diamonds. Here is the Dow. We have made a fresh high. This is the third fresh high that we've seen since August 26th. So all-time high, all-time high, all-time high on the Dow. Recent higher lows, recent higher highs. If we push a little bit higher, kind of the same type of thing, maybe looking for a bit of a pullback. There's a halfway point. There's a bit of a range, but I'm actually going to draw this out here. So lows like so, and connect the highs as well, and see how that plays out. So in case we run into some resistance around this 420 handle, see if we have a turn at least in the near term coming back to like the halfway channel. Russell did some pretty good work to the upside as well. Give me 1 second here. We're not quite at these recent highs. This was the FOMC high from the 31st of July. Still making higher lows, which I still think is a good sign. But this structure definitely needs to hold. If we zoom out, I want to say we have like 11%, maybe slightly less than that to the upside. If I go current price or the close on Friday, about 9%. That's a chart alarm, but if we get to the all-time highs, it's about 11%. 11% to the all-time highs on the Russell. Expect some volatility. I mean, if there's something along these lines, similar to the Dow, where we're making higher lows, higher highs, just trying to make sure that this thing doesn't turn, in a nasty way. I really don't want to see the Russell break lower. If we do that, then that major multi-year support we have back in 2022 could be where the Russell ends. But if we stay somewhat steady, pushing up here, a little bit more accumulation, let's see if this market can make a run. One kind of big milestone this year would be that the Russell joins the other indexes and making all-time highs. So we'll see if that's possible. If there's a chance to buy, a pullback, or if we have a bit of a pause or a pullback in here, as long as we maintain this higher low look, I'm still going to be pretty bullish on the Russell. Between the IWM, the RUT, the RTY, I trade quite a bit of those if I'm just going to maintain this move. Catherine, good morning. How are you? All right. Volatility index, 15.64. Let's check the VIX term structure really quickly. Oops. Yeah, that's good. So this is anticipating slightly higher volatility through September into October. Slight uptick in volatility. Are we elevated right now between this 15 and 20 handle? Maybe. So I mean, I don't think we're coming back to 11. There's certainly a lot of news to unpack in the next week or two. Remember the news cycle that we have coming up in the next couple weeks before the Fed. So this week's news, we will have U.S. PMI numbers. So we'll have manufacturing and services. We will have ADP non-farm. We'll have JOLTS, which is the job openings. We'll have unemployment claims. And then we'll have non-farm payroll. Next week's news, we'll have U.S. CPI and U.S. PPI. We'll have unemployment claims. And then we come up to the third week in September, which I want to say the week of the Fed, the week before the Fed, we have the European Central Bank. The week of the Fed, I think we have Bank of England and the Fed and the Bank of Japan. And then the week after, we have the Swiss National Bank. So we have, then we'll come into FOMC week. We have 6 central bank rate decisions, which is a lot. So in like a 2-week span, and then this week we actually have CAD rate decision as well, which is expected to cut. But there's definitely a lot to get to this month, and unless the U.S. news is going to surprise to the upside, I could see the slowdown that took the market by storm August 2nd and 5th. I could see a little bit of those jitters coming back into the markets. So price is going to tell us what to do, but that's what I'm expecting is seasonality wise. September is typically a rough month. 0.7% on average for the last trying to think 70 years, 0.9% over the last 10 years. So it has not been overly bullish. It's actually struggled, which has set up the market for a pretty good rally into the end of the year. But of course, we wonder how it's going to get through any type of election drama that we see moving forward as that comes up in November. So, in fact, I mean, the September effect could linger into most of October because it's going to be election post-election that kind of gets us out of any trouble or any drawdowns, any pullbacks. But I don't know if the market's going to have to wait the whole time. But it's going to make us wait the whole time. So we will watch and see. All right, what else do we have here? Dollar index. Dollar index did, in fact, bounce off the lows. This was what was expected. We sold off super aggressively since the tops here in this is May. April, May, top on the DXY. Another one here in June. Really, since this lower high that we had in June, the dollar was hit pretty hard. But structure support right in there. And so far it seems to be holding. If I were to zoom in, I mean, I don't know. I guess you can do something along these lines. I typically operate with more like horizontal levels, but maybe the dollar's doing something like that. Um, as long as we stay above this, if the dollar has a brief pullback but then pushes higher, we could come right back in the middle of this range. No major damage done by the bulls. And because we turned right here, really no major damage done by the bears. So dollar index could be indecisive. The other way, and this is what I'm looking for, just in this recent spill to the downside from 106 down to 100, we had lows around 100.50. I would say somewhere in the halfway point around this 103 area. If there's a rejection here, let's say the bulls have a little bit of a short-term rally. If they get rejected right here, then we look to see if the dollar turns back to these lows. Okay, if there is a breakout coming on the dollar, there's more to go. I mean, high to low, lower high to lower low. There's certainly a lot more downside to the dollar that gets us into the mid 90s. But I would expect the dollar to kind of behave like it did off this turning point, major support for the last couple of years. And if we turn, pause, head higher, I could still see some dollar strength, especially if the market takes a bit of a downturn. You have to wonder what the news gives us for the dollar. If it's stronger news, does the market take that as good for risk appetite, or the market takes that as I have no idea. Is the market going to be more resilient, showing better labor numbers? Is there going to be a softening? Is it risk off trading? There's a variety of reasons why the dollar can show strength or weakness. And in this case, if we show dollar strength, I wonder if it's because of risk off trading or if it's because we actually have good U.S. data. Not sure. Oil, I'm just trying to stay out of the mess here. Oil is very bouncy around this $72 low. Obviously, we look left. There's more. There's more support right in here in the mid to high 60s. So $67.50 to $65. We are making lower highs in oil. We are making kind of equal low support around this 65 to 67.50 area. I did take a couple of stabs in here and got lucky on a couple of timings with that level bouncing. I'm no longer as interested trying to play that bottom, but instead just trying to look at areas like this. If we're going to hold, if we just hold and start making a turn to the upside, so be it. Maybe there's another wedge right here on oil, but for the most part, it's just support down here, resistance here, and just trying to stay out of the noise. That's oil. Let's go natural gas for a moment. Natural gas, I've got a chart alarm set to $1.50. I'm hoping we can pull back to it. Maybe this is a trade for me through 2025 into 2026. Gold at 2,500, still pretty well supported. If we have a weaker dollar, that's going to be a good move for gold. Pullbacks would be kind of welcomed in my opinion. We do have a healthy bull market. We've had ups and pauses, and if we're just going to drift higher, I wouldn't really be looking to get out of gold until we have some type of crazy kind of exponential rally that looks like it's broken. I mean, a push and a pause is pretty healthy, even though we're sitting here at all-time highs and we don't know how much higher gold's going to go. If we start to get a vertical looking move, I'm just going to be trailing stop losses and just trying to protect profit. But if we just go sideways and then up a little bit higher, sideways a little bit higher, that structure doesn't necessarily change anything until we get kind of a capitulation move. But pretty good. Silver, hanging in there. I'd like to see silver break above this little area first. Pass support right around this 26 handle. I'm looking for an open space move. If we get silver up in this area, probably be pretty aggressive on some option trades with SLV, some futures trades with SI, and target one for me is 35.88. Next target's around 45. So I still like silver for some accumulation, and I have some credit spread levels below 26.50, below 26, and then some naked puts around 22.50 or lower. Bitcoin 58. listened to an interesting webinar with Jordy Visser, Weiss Capital Management this weekend. Makes a pretty compelling case for, you know, wealth management, bigger firms, financial advisors, trade managers, portfolio managers, uh, clients, investors in general, just building the, kind of the case of Bitcoin is a brand. It's kind of the optimism of Internet 3.0 and AI and all this other stuff. I mean, it can kind of be wrapped into how's it going to reflect it in charts, probably through Bitcoin. So um, if you're interested in that, just send me a comment if you'd like to. I've got the video for that if you want to check it out. But I still like where we're at. I mean, I've got a measure move up here towards 103. All that was, I think I just did this. I think I looked at this pulling back about 50%, and we took this swing, right? And then I plotted symmetry. See if we're going to get back to 100K. We are making lower highs right now. We are making lower lows right now. So we're what seems to be a pretty healthy corrective phase. It's obviously not like a crash phase. It's there's a lot of resiliency in here, which is good. For me, the next trade, I mean, if we did pull back and we retested that 50K low, or we came back to 45K or so, that's fine. 44,000 would be the 50% pullback from this 15.7 low to this 73.9 all-time high. We pull back 50%. We've got our magical fib numbers in there. So whether we pull back to the perfect, golden ratio at 618 or not, there's still some symmetry that gets us up over 100,000. And if this is a, wave one, and this is all a wave two, wave three could be pretty exciting. We could have a lot more to go. Wave four could be a pause, and then wave five could still push higher into that 100K mark. So watching for, maybe a chance to buy somewhere in here again. And we have mining costs, I think, are sitting between like 73,000 and 79,000. So even if we pull back a little bit lower, I'm still interested in some tests, some small entries, some dollar cost averaging, and we'll see if we catch up to those mining costs, and then from there continue to go. So there might be a couple opportunities, either one on pullbacks, or two, price goes higher, pauses above these all-time highs, and then we break and go beyond. So still excited for Bitcoin to stretch to all-time highs, and let's see what it does. If it does that, is Ethereum going to follow? Maybe. Let me set a chart alarm right here. Actually, I'll move this. Recent highs. I'm going to move this down. There. So that's 2809. So we'll go 2814. Recent highs. Set that chart alarm on Ethereum. Asia markets. This is the Nikkei, since we do have the Forex market open. Japanese yen weak, New Zealand weak, Swiss weak. Okay, I don't mind this. The Kiwi, I'd like to see the Kiwi get a little bit stronger, but happy to see the Swiss and the yen are softer. That's a good sign for some continued kind of risk appetite flows. Dollars mixed. Yen again all over the place. Weak in the morning, strong during the right into that late Asia session, and then super weak during the kind of the active zone today. But Aussie leads the way. Euro, pound, dollar, CAD next to each other. So watching the relationship between the Nikkei 225 and the Japanese yen. This is Japanese yen futures. We've seen about 5 candles in a row on the daily chart to the downside, showing JPY weakness. Again, another spot to be interesting: high, low, lower high, lower low. But off of this big Japanese yen swing right here, are we going to see swing, high to low, lower high to lower low, and will there be another area of Japanese yen strength and risk off, or does this just make its way, and we're right back where we started on the Japanese yen? That is a huge question mark. I don't know. I'm watching the Nikkei, watching the Japanese yen. We'll watch our JPY crosses in Forex trading. Same thing. Okay. All right. Anything non-US? That's Japan, DAX. We poked some all-time highs in the DAX for the German index. FTSE looks like a bullish pattern to me. If we have, I mean, this is a really solid accumulation zone. So with this slightly higher high, I'd like to see something like this. We come up here, maybe pull back, and I don't know. It's either going to be we set a retest at this level, or we pull back again into this support that looks to be around 8150. So this 8150 support zone, not a bad spot to look for some fresh highs on the FTSE. Also, bigger trend line out here. Oops. So outer trend line looking for additional support after that August 5th bottom. China, still pretty sideways. I do wonder if this is a trend line break right in here. And if we're going to break, consolidate, accumulate, look for some more upside on China. If we see, I want to say the MSCI, there's an MSCI world, there's an MSCI non-US, and China is a big part of that. But I'm watching that for some performance, especially if China wakes up a little bit. FXI as well. This did not get called away for me last week. I own the shares around $24. I've been using some active options to lower the cost basis, so I'll do that again. And I don't know. I may get it called away. 26.50. I'll try again. Maybe 27. Let me see if I rolled that. Let's check. Let me see if I rolled it. Still looking. All right, let me log into Tasty real quickly. I think I rolled this for like 38 cents last week. I mean, I can't do anything today, but I'm just curious on my net cost. If I rolled it by another 38 to 40 cents, let's see what happens. Okay. Just bringing up my broker platform. Intel CEO pitch board on plans to shed assets, cut costs. Source says, okay. We go to FXI. I did. Yep. So I've got to update this. So I ended up closing out my August 30th 26.50 for like 2 cents, and then added in the September 30th $27, and that's to get it for another 38 cents lower. So let me minimize that. I'm going to update my spreadsheet. Added 9:30 expiration, $27 sell call. It's covered call. All right, so that 24.76 is now 24.38. And if that gets called away at 27, gives me $2.62 per share. Okay, so that's updated there. EWZ is Brazil, hanging in there, dollar cost averaging in, Mag 7s, NVIDIA. I did have a couple of assignments last week, and I got rid of them, so I took NVIDIA for a 25-cent loss. CRM was the other assignment I took for a 65-cent loss. Tesla, fairly resilient. I do wonder on Tesla if this is setting up for a pretty big. Tesla's probably a stock that If it comes down to the lows, I still have some ratio spreads down here. I wouldn't mind owning Tesla in the low 100s. If we end up breaking these highs, this would be, I mean, we break above 280. 280 to 400 plus is a pretty good open space to be long on Tesla. I hope there's another opportunity to be, long a little bit lower, but I am noticing, this kind of corrective channel. If we have a bit of a head and shoulders in here, that I could see us breaking this 280 as a bit of a neckline. And if that is the case, then I think it'd be pretty solid play to be long Tesla. But two spots, either one, 120 to 80, somewhere in this area as kind of a nice kind of long-term buy zone, or, fresh open space breakout between let's say 275, 280, all the way up to 400. So a little bit of accumulation right now in Tesla, but two areas that I'm watching pretty carefully. Let's take a look at the bonds really quickly. So TLT, trying to get TLT through $100. I have symmetry measured out towards 105. I've got a sell call on a diagonal spread. I'm long TLT through 2026. So I think there's plenty of time. If we end up, let's say from this low to high swing, excuse me, from this low to high swing, if we see TLT come back into the same levels around $88, I'll probably take a stab there, get back to the highs around 100, and see if I can grab a little bit of kind of diversified gains on bonds. That's not a bad spot to accumulate. I'm pretty bullish on TLT through the 105 to 110 handle. We come above this level, I'd be trapping some profit. But there may be another spot to add. I'll either one add shares of TLT around this 90 handle, or I will get into a longer term like a leap option on TLT probably out through 2026. Let's take a look at the yields. We are sitting at 3.92 on the 2-month, 5.1 on the 3-month, which has come down quite a bit. The 3-month yield was at 5.5%, almost 5.6 has come down a decent amount. The 2-year has dropped and actually dropped faster than the 10-year. We are right on that point again where we're 1 basis point inverted. So coming out of this inverted yield curve, we're going to see if there's a steepening effect where the maybe the 10-year drops along with the 2-year, maybe the 10-year drops faster than the 2-year to still keep that inversion, but it's right there. And as we've talked about now for almost a month, we haven't seen the markets respond favorably to coming out of an inverted yield curve. So we're right there on that 10 and 2. Another one that's pretty common as far as like opinion recession would be the 3-month and the 30-year, which they're not necessarily coming out of inversion, but it's been a pretty dramatic shift in yields as of late. But you got to watch, right? If yields start heading higher again, bonds drop or vice versa. Just keep an eye on these. 30-year mortgages have come down from plus 7.5%, 7.4%, down about 100 basis points. We're sitting here in the 30-year fixed mortgage at 6.35. We're sitting on the 15-year mortgage at 5.51. The Fed likely cuts another 25 basis points in September, and let's see what the market is anticipating for the rest of the year. Things have been a little bit quieter and more stable on the Fed watch tool. Probability is still 25 basis points for September, 69%. And then, so if they cut in September, 25 basis points, and then it's still a bit of a toss up for November. So 50% that we cut 25 basis points, 41% that we cut 50 basis points. So the market's still looking for a cut and a cut and a cut by the end of the year. And is it going to be 25, 25, 25, or is it going to be 25, 50, 25? Either way, I mean, if it adds up to be 100 basis points by the end of the year, that's a pretty aggressive monetary policy. Well, I should say that's a pretty dovish monetary policy to start cutting that quickly. And then in September, there's likely going to be one additional cut. So it seems like November is the big one. If they cut, 2 days after the presidential election, I mean, you could argue that it looks a little suspicious right at the election time, but who knows? We'll see what the market's going to do. But cuts are likely coming. It'd be way more of a disappointment if the Fed's like, we're not going to cut. I think September is going to happen, But if the Fed is like, we can't just go full on dovish, we can't just cut inflation data doesn't support it, blah blah blah. They could do that. So if there's any type of Fed pivot to pause, that's likely not going to be great for the market. Okay. All right. Any charts? Any questions that you'd like me to take a look at for right now? Let me see here. Let me see one thing really quickly. If there's some currency pairs, we can take a look at the dollar crosses really quickly. So Aussie dollar, I'm still looking for, get rid of some of my arrows. So trading. Let's see if that takes the arrows off. Nope. Positions. All right, whatever. All right, so Aussie dollar. We're going to see what this dollar index has. I mean, it's really all about the dollar index, but pretty clear support resistance. Resistance here, support here, lots of volatility. Is there open space? Sure. And I'll say this, risk on trading up here. Okay. Severe risk off trading down here. And this is all about what's the dollar index going to do. Okay. If the dollar index is given a strength, then most likely this Aussie gets faded back down a little bit. If we have risk on trading, we see a weaker dollar. I think the Aussie and the New Zealand both benefit from a weaker dollar, as does maybe some China, some China strength. Finally waking up and doing something to the upside on FXI and KWeb and HSI. But I like the open space. I mean, if we have a range, go low to high, measure that symmetry move towards like 73 to 74. But there's some open space up here if we get a nice clean breakout. Maybe it happens at the halfway point of this range. Maybe we have one more test. Okay, maybe we have one more test in this like 66, 65 zone, and then we push to these highs, break above these levels here. We can get involved in a swing trade, stop loss below, but just watching support levels and watching the dollar index. Okay, Donna, thanks, appreciate that. Lee says, I looked at the Dow this morning, wasn't convinced by what I saw. I missed something. Well, what'd you see? What do you see on the Dow? I mean, we've hit 3 all-time highs again in the last couple weeks. This is the structure that I'm watching right now. I mean, the market has clearly done everything that it can to make a decent recovery off of August 5th's low. I think that it's fairly limited to the upside for right now. What I would expect seasonality wise is that we're going to go into a bit of a lull. I don't think that September is going to be melting up to all-time highs. If it is, and this is just my opinion, but I think for a healthy bull market, we need to pull back from the all-time highs. So either one, we tap the all-time highs, or we start fading now. We're right there. Like Dow's making all-time highs. Russell's retesting those FOMC highs from July 31st. Qs have a little bit further to go, but look like they're more vulnerable. And the SPY is within 1% of the all-time highs. So either we have one final push to tap those levels, and I just think it's a great spot to look to fade it. So I see a healthy bull market. It needs a pullback. To me, if we don't see a pullback, obviously there's more upside, and you never know how much higher the market's going to go. But I don't necessarily think that a melt up through September into the end of the year, it's going to make me way more bearish going into 2025. I think we would stretch. It'd be capitulation type move. It'd look like it's just a one-sided, lopsided asset bubble. I did want to find something. I've got a couple of things I need to look for. Some of the content I was consuming this weekend. See if I can find the screenshot. I'm going to see if I can find it here in Trading View. I hope that we can find it. Lots of screen. Oh, here we go. So the S&P price to sales ratio and also the S&P price to peak earnings ratio. Let me see if I can find that. S&P peak price to peak. Take a look at this. I thought it was higher than what it's showing. I've got this thing running out to like 25.6. And then my price to sales ratio is 2.93. I mean, we're coming back to like 2021 levels. If you go to price to peak earnings, we're higher than we were back in 2019, 2020. And we're not quite as bad as we were back in 98, 99. We're at 29. We're at 25.6. So when is this? Yeah, this is back in friggin' March. So this isn't relevant. Let me see if I can get a price to earnings ratio, price to peak ratio. See if this shows it. Here we go. Yeah, this is perfect. Price to peak earnings over time. So back in April 2021, 29.69. Now it took, if you think about this, this is a decent peak in this price to peak earnings on the S&P. It took most of this year in 2021 in order to actually top out the market, because the early tops that we saw were November 2021. That would have been like basically a Fed pivot where, I mean, it wasn't really raising rates necessarily, but it was just a Fed pivot, and there was a massive deleveraging in 2022. So I mean, there's still, I guess there's still room, but I mean, you look back here, we know that wasn't a great time for stocks. We know that shortly after this, it wasn't a great time for stocks. So could we go a little bit higher? Sure, but this is what I'm saying. If we have a melt up through the rest of this year and this climbs higher and higher and higher, I am looking for a reasonable correction. And I don't know if it's going to be a crash type correction or if it's going to be just a, it all rolls over, starts to fade, healthy bear market cycle, maybe, three waves to 5 waves. But I'm going to save this. This is going to be price to peak earnings. Toppy bull market. So keep an eye on that one. And then also the price to sales. So core P's been down. Where is the money supply? Here we go. Price to sales ratio. See if I can find the same thing. Price to sales ratio. Oops. See if this has the price to sales. There we go. There it is. So these are the two things I want to pull out. Price to sales ratio, where we are at. Okay, again, looking at where this thing started to get a little toppy in the markets late 2021. We're not quite at the same highs yet, but we were there. What's interesting is this. Price to sales were just absolutely demolished back in 2007, 2008. Bottomed out here when we had that 2009 bottom in March. So higher than we were back during the dot-com bubble leading up to that. and then our deleveraging in 2022, we're getting to the same level. So this is price to sales. Okay, and valuations, price will tell us. Listen to an interesting, like, Howard Marks, Oak Tree has this. It's just a podcast, but it's called The Memo, and it's a bunch of, like, just narratives of things that he's written over the years. And then I listened to an interview, some interesting takeaways. But it's just funny. Like, if you could take out the emotions of the market, it'd be a little bit easier, but you can't. I think because of the emotions, because the extremes in sentiment, because the extremes in prices with companies. I mean, valuations are so emotional that that's where we get these massive swings. And it's good in a way. It's good because you have buyers and sellers, and it's what makes a market. Um, but I mean, the overall economy is humming along around 2% a year. The average company, growth wise, I mean, you're going to grow at 4 to 6% a year. And the fact that we have these wild swings and wild valuations, it just shows like price can go all over the place. So it's opportunity, but it's just not normal. And you throw in the emotions and the sentiment swings on top of that. It's just like layer upon layer of things that make this a very complex and complicated thing where even the most brilliant minds and deepest and craziest resources in the world can't truly predict where the market's going, at least for the near term. So day to day is more, what's the mood, but long term, it's what type of cycle are we in? If we have bullish cycles, bear cycles, is it time to start see things rotating? But anyway, I want to pull these up to have a reference, and I want to start referencing these more often because these are two things I'd be looking at historically as well that should matter. And also, we've always talked about this. You've probably heard the saying, John Maynard Keynes, right? Markets can stay rational longer than traders can remain solvent. But also there's a quote. So we said Mark Twain, history doesn't rhyme, or I'm sorry, history doesn't repeat, it rhymes. That's Mark Twain. But Voltaire said that history never repeats, but man always does. So take the emotional side of the markets and like how people behave during times of bubbles and busts and booms and busts and crisis. And I mean, people behave the same way. It's like there's one exit, there's a fire, everyone runs for the door. We saw that happen, August 2nd, August 5th. That was just a taste of how nasty things can get. Um, I mean, I almost think that if you want to kind of predict the next like bubble or the next bust, um, just think about what people are going to do, right? I mean, in 2020, everyone thought that the world is forever changed. We're never going to leave our houses ever again. And it was, an immediate thought. And then, 2 months later, the market bottoms out and it doesn't really reflect the real economy. And it's still lingering 4 years later, and people haven't felt like things are better because inflation is still high. Yes, the pace of inflation is slowing, but inflation is still there. We still have to wonder if there's going to be a wave two of inflation that we're not really prepared for. And I think everyone's going to get crushed if that's the case. So, but there's an emotional element to all this that I think that's what really gives us the evidence of like how to trade it, you know. So I thought that was interesting this week and just taking that away. Lee, you good on that Dow Jones stuff? I mean, it'd see slightly higher highs, higher lows. It's a little choppy at this time. The structure still needs to stay the same though. Even if we have a pullback, right? A pullback here in the near term is fine. I don't want to see any damage done to the downside. Same thing on the Russell. The Dow and the Russell collectively look pretty similar to me, except the Dow is at all-time highs, the Russell's not. But watching the same type of behavior, if we go up to the highs, pull back to the midpoint, or maybe we start fading back to support, as long as we're having higher lows, it looks better. All-time highs in the Russell, and the Dow is sitting here at all-time highs. So, as I mentioned, healthy bull market, in my opinion, is we should have a pullback through the month of September. Maybe we have a pullback through September into October, and then it's post-election that the market figures out, okay, we're going to be fine. Let's go. Let's rip. And we have a big, Santa rally post-election into the end of the year. Whoever is president doesn't freaking matter. If there's sweeping policy change, I don't know. I think there'd be more likely there'd be heavy amounts of policy change if Harris is president. If we're truly talking, increasing taxes. I mean, look, I'm not in the $100 million camp, not even close. But anyone that is a trader, investor, if the thought of getting taxed on unrealized gains is, I don't think there's any way they can pass. If you can let politicians trade, guess what? They don't pay it. Like I mean, again, how the heck would you let people that invest and all of a sudden you have like quiver quant these services that actually follow flows and purchases of politicians. They long the stock or they long these options or whatever they disclose, and somehow they're not going to be affected by this and they're going to pass this type of bill. Unrealized gains is crazy to me, that you could be subject to 20-25% taxes on unrealized gains. Like, that seems completely bogus. So I hope something like that doesn't pass, but who knows? So I think there'd be either way. There's going to be fiscal spending. There's going to be a debt spiral that continues. That's not going to change. But you never know. I mean, it could be the weirdest, most like polarizing election. It could be nothing really changes. The market likes gridlock. It could be, who knows? But I'm pretty exhausted already, and it's not even October. It's not even November. So I think it's just more, let's I don't know, deal with it when we have to. So all right, couple other questions here. Bullish on Aussie Swiss, Aussie CAD, Pound Swiss, Dollar CAD, bearish on Euro Yen. Am I good? You're just throwing every trade at me. Like, am I good? I mean, I'm bullish against the Swiss. You should know that. So I'm bullish on Aussie Swiss. Yes. I'm bullish on CAD Swiss. Yes. So I'm bullish here as well. I'm still bullish on the Euro Swiss, even though this one's pulled back the most, but I'm still bullish on this one. If we break, that level on the Euro Swiss, we are also sitting near those equal lows over here from late 2023. So that level, I'd love to see this become a double bottom, which means I'm looking for the Euro Swiss, if it can make its way out of here, get above this high. I meant to draw that a straight line. Get to this high, get above this high, and there's more to go. But if we get towards parity on Euro Swiss, I'm probably going to take some profit. Okay, so I'm still bullish on that. Pound Swiss, yes, still bullish on this one. Pound Swiss, I didn't add much on that fall, so we went from July all the way down to that August 5th bottom. I didn't add anything on the Pound Swiss. I'm still going to hang on to it, and this is still my 120 target up here. So 120 is still my profit target on the Pound Swiss, which means there could be some accumulation in here. If you want to trickle in a couple more orders, I could see that supporting it. I just want to be careful on the trade size because it is a 5% margin pair versus the others being around 2%. New Zealand Swiss, still bullish in this one as well. I like this New Zealand Swiss all the way back up towards 5,600. I'd also love to see this thing, if we find a way to get back to 5,600 and then we have a pullback, this is a great zone to be adding, and then have a low, high, higher low, higher high, all the way back up here towards 6,000. New Zealand Swiss could be a great trade for the next like 6 to 12 months. And I hope that is the case. And then dollar Swiss, even though the dollar's been weaker, pulling back to these levels, we actually tapped some fresh lows. That is August 5th. We tapped some fresh lows. The dollar's turning there. I mean, it could just be a range trade, right? Testing this level here. Is it going to be some type of like bull crown off this area, coming back to this high around 92? I still see this big pocket between 96 and 98. There's parity, of course. So I'm still buying dollar Swiss low, trying to trade it back to 92. This is probably a safe profit target, but this is where I'm going to let go of my profit. I'll probably take partial profits here, but maintain a core position, and still trying to take, 96, 9,700 is going to be my main profit. Dollar or Aussie CAD, yes, still bullish on that one. New Zealand CAD, I'm also bullish on as well. Yen crosses, I'm not doing anything on yen pairs. I'm staying out of the yen for right now. The yen's been weaker. I had mentioned this earlier. Let's go to Euro Yen for a second since you posted that one. I mean, I guess to what degree, the one that I am bearish on is the Swiss yen. So the Swiss yen is pulled back. I do have these sell trades in. It's right here. So if we have a low, left shoulder, head to neckline. Now, I know the textbook way to trade a head and shoulders is to not anticipate the right shoulder, which I'm kind of doing. But at all-time highs and what I think is a pretty good setup for, and I'm still looking for a Swiss basket to get a lot weaker. So I just have trade 1, 2, 3, 4. Stop area is somewhat flexible above this high for right now, but not too much more flexible than, I'd say 182, 182.50. So what I'm going to look for is, if I'm testing the levels, I'm looking for price to come back down to retest the lows, target 1. If we go lower than that, high, low, lower, high, lower, low, or set up a flat pattern, I'm still looking for symmetry towards like 160 or lower. Okay, so there's my 160. Got some profit targets lined up on this one. So that's the one. That's the one Swiss pair. I'm sorry, the one yen pair that I am willing to say I'm going to take some stabs at this one. And my trade sizes are all very small. Euro yen, I still think it's similar structure. But if you're short now, I don't know where your stop loss is. But if your stop loss is here, sure, high, low, and then we have a little bit of a correction, and then we short. So I could see this area getting found, like the 168 handle. And we've talked about this as well. This is really common structure in price action. You have a high to a low, you have price pull back into an efficiency wave, and then we have some type of harmonic pattern to get short, and you can start getting short, and you can target wherever it wants to go. Target symmetry, right? High, low, lower high, lower low. But it might get there with some wave cycles. So you have a high to low swing, you pull back up here for a 3-wave move, find some efficiency there. That's a Gartley pattern. Look for structure there, look to short it there. That'd be 168. Look for turning points, and then try to take this back down as low as it wants to go. So I like the trade. I just would say it's a small trade size swing that stop losses be above 176 or 178. That's my euro yen. Ball out. What currency are you talking about? Natural gas impulse. If it hits 150, I'm probably going to take some option trades on it. That's all I would do. So we're trading at 2.19. The forward contracts are, they're like $3 and change. I might miss a lot of this. This could be potentially a head and shoulders somewhere in here. Could be, but I just don't know enough about the inventory and the seasonal cycles of natural gas to say that I'm all confident we can go up. There's a lot of potential here. Okay. I could see natural gas as a really nice trade, but I don't know. I mean, I'd like to see it revisit the lows at $1.50 and then just stay out of the way. But I don't know how much I'm willing to pay for a futures contract. Maybe what I could do, and I can check this out, either today or tomorrow, but maybe going out to like 20. I don't know how far I can go out on futures contracts, but let's find out. Let's go natural gas. So if I go natural gas, I mean, I can only go out to May of 2025. I would be more interested in like somehow going out to 20, maybe end of summer 2025. Maybe, I don't know. But I'm thinking if I bought like something way out of the money, if I bought an out of the money call option and it didn't cost me an arm and a leg, for example, let's say that I bought like a $4 or a 4.9. I mean, that's so far out there, but like a 4.90, like way the heck out of the money. Let's just say I bought a $4 long call. Okay, so I mean, there's still risk there, but if I did a 4 and sold a 5, I mean, I can risk about $900 to make $9,000. There's risk in the trade, but like I said, I don't know enough about the seasonality to think. I mean, if I buy a 4 and I sell a 5, there's a lot of profit there. But if this thing just goes bananas, like why would I want to cap my upside, right? If I bought a 4 and this thing started to rip, why not make as much money as we can with no upside? Well, it's going to cost a lot more just to buy that call option. So, like I said, for me, I could see this as a head and shoulders pattern. If we do tap these lows, I probably will just put on either like a naked put that's hedged. I could do like a -1 here and then a +2 out of the money that's just hedged just in case and generate, maybe $500 of income, whatever. But to the upside, I'd have to get the timing right, and that's what I don't know. I'd be more willing to trade like summertime for increases in natural gas because everyone's using air conditioning. Versus, I mean, suppose you can use natural gas all winter as well, but it's probably more consumption in the winter with with air conditioning. So anyway, I'm watching it, but probably some more to dissect between now and then. What the heck? That's weird. Arrow. But yeah, I like it. Thanks for bringing it up. Okay, so turns out that the A1 trading team is not running live streams today, so I will pack up the session there, and we'll talk more this week. Just to do a quick recap on my end, so a couple things have changed. I brought up a couple things this weekend. I'm still building out a couple of spots in my Discord channel, so there will be some changes to my Discord channel. I'm just giving you a heads up. Free group chat, of course. Feel free to jump in, use it as much as you want. Any type of specific asset class, forex, stocks, options, futures. Anytime I go live on YouTube, when I post those TradingView updates and videos, they pop to my YouTube channel. My blog, I'm keeping this pretty active almost every single day. If I share anything on Twitter, pops up on Twitter. Any analysis, kind of blog analysis, going hand in hand. My educational offerings will be changing as well in the next probably 30 to 60 days. Private instruction, I still get messaged quite a bit on that. People know how to find me there. Affiliate links, Edgeful, Dynamic Trends, Tasty Trade. And one thing I want to mention here, I'm going to edit this in Tasty Trade. So open new account, promo code, my new bonus. Yes, also this is trade low commissions and virtually every asset. So you can trade ETFs for $0. You can trade stocks for $0. You can trade options for $1 entry. So $1 per contract entry only. So there's no exit commission on options trading. And then futures, I think it's $1 to $1.25. So, I mean, and I've gone to several Tasty Trade events and conferences. I look, I know that they don't make a lot of money on trading itself, but they do. I mean, obviously, like they've created an army of traders that are aggressive with options. They like to trade futures. You can trade crypto as well, and cryptocurrency. So can trade a lot of different asset classes. You can do this also on IRA accounts in addition to cash accounts and margin accounts, which is pretty cool. They have this thing called the Works. And I mean, I this is part of the reason I chose them is I have a lot of IRA accounts that I look after, and trading whatever asset class I want allows me to diversify. So then we have TradingView, A1 Trading, the Edge Finder, stuff like that. So nice emoji for my TradingView charts. But anyway, you'll see some updates on my Discord channel coming soon. So just stay tuned, and I appreciate everybody being here. Keep asking those questions. You know how to find me. Best place to find me every single day if you need me is free group chat in my Discord, or just come and find me live. And I'll see you all this week. Okay? All right. Take care. Have a good rest of the day. Happy Labor Day. Markets are, I mean, I'm going to enjoy the rest of the day as well. So markets are done. I think there's limited hours on futures. Here's my futures chart. There's nothing happening here. We're kind of melting up a little bit through the morning. Let's go for the last couple of hours. I mean, we're talking about maybe 30, 40 points in the NQ. If I get this chart here. So just a subtle melt up on the S&P, subtle melt up. And how does this translate into, the open tomorrow? For the SPY and everything else, I don't know, maybe slightly higher, right? We're trading at 563.68 with a close from Friday. If we open higher, do we open higher? We have PMI numbers out Tuesday, Thursday. We have ADP numbers, unemployment claims, non-farm on Friday. So we'll see how this all shakes out. Another couple weeks. Then we have the Fed. There's a lot of employment news to dissect. There's a lot of inflation news again to dissect. And I still, like I said, personally, I'm looking to kind of fade the near term and expect September to be a little bit more on the heels where the market pulls back. And this is where I think is healthy. I think the market pulls back and is healthy. I think we get to these crazy high valuations. I'm a little bit more standoffish going into the end of the year. So we could have a melt up for the rest of the year, but I think a pullback would be healthy, and I hope we have one because I'd like to make some money in the short term for a pullback in September, and then see if we can position for some type of end of year rally, Santa rally that doesn't matter who's president, market's going to do its thing, and then 2025 is a whole different animal. So, all right, sounds good. Happy Labor Day.